Welcome to Drill Down Earnings. Tech earnings are back, and so am I. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We're looking at ASML, that really interesting company. You could make an argument it's the most important company in the world. They make chip equipment, really highly sensitive, incredible chip equipment. We look at the 50 most important companies in technology, and I say this may be one of the most important there is. ASML, Dutch company, reporting Q1 earnings, and they were challenging. The earnings were actually pretty strong here in terms of dollars. They reported in euros, but they had 5.7 billion in revenues, 2.4 billion in profits, $6 a share in earnings per share. But let's talk again in euros. So total net sales of $7.7 billion, gross margins of 54%, net income, as I mentioned, 2.4 billion euro. Really impressive. The concern was, and the stock sold off, we'll talk about the company, not just the stock. That's what we do, tell the business story behind one stock on a move, and this stock that is moving, as ASML, is moving down today because the bookings number was light. 3.9 billion in bookings. So that's kind of your headline numbers. Let's look a little bit deeper. This was a good quarter for this company. Revenues were up, my goodness, 46% on a year-over-year basis, and have not only been growing for most of the last year, they've been growing at an increasing pace. Like I said, 46% to nearly 8 billion euro in revenues. Let's talk about, all the news right now is all about China and what's happening with chip sales to China. But the restrictions are on chip sales to China isn't the only thing. The restriction on semiconductor equipment to China is also a big thing, coming from the EU, led by the US as well. And we've seen the China equipment sales, which really had been surging the last few years. You can see that China has been focused on getting the most powerful equipment they possibly can to make semiconductors. That's now slowing, and as a percentage of sales, it is decreasing. And overall, it's been decreasing the last couple of quarters. Now it's at 27% of all revenues for ASML in terms of sales to China. That was single digits 2 years ago. So China's still buying everything that they possibly can, despite these import restrictions. And in the quarter, it was 2.09, what do we want to call that? 2.1 billion euro in revenue. So still really big numbers, but a declining sort of percentage. Now, if you think about what these guys do, the most important machines, the most highly sensitive machines, the machines that cost upwards of $250, $300 million per machine, those are the EUV machines. Those are the AI machines that are used to make things like NVIDIA and AMD chips and Intel chips somewhere down the line. We know that those machines have been selling into all those places. And those EUV machines are now a vast majority of sales, really for the first time ever. Maybe I guess you can go back to one quarter in early 2023, but EUV machines are a really big deal here. And again, where are they selling these machines? A lot into China, a lot into South Korea. We can think of memory right there. And as well, Taiwan and the US. An interesting thing here too, because there's more EUV sales, the average revenue per unit has really surged now. When it was amazing when it was 35 million euro per unit, well now it's at 74.6 million euro per machine. These machines are just incredible, technological marvels. I think you can make the argument that it's the most complex machine in the history of mankind being sold by ASML. Nonetheless, bookings are tanking. Bookings were down 55%, a really dramatic decrease for this company. And while that number swings up and down all the time, I think given what's going on with concerns about the global economy, because of the tariffs in the United States is imposing across the world, slowing down global trade, there's concerns that ASML's orders are reflecting concerns of a slowdown, even though we know there's a big boom in the world of AI. And again, selling units, system sales is the dominant business here, but taking care of existing units is 26% of revenues and something to keep an eye on. Now, these numbers were not seen as very good, even though, as I mentioned, revenues were up over 40% on a year-over-year basis. But the stock was down 8% over the course of the day after the numbers came out in the wee hours of the morning. And indeed, for the year, the stock is down 35%. So here we have one of the most important companies in the history of the world, making the most complex machinery in the history of the world, into a boom market of AI and other stuff in technology, and yet the stock is down 35% on a year-over-year basis. Now, they do a really interesting thing with this company. It's one of the rare companies that actually does a conference call, a video conference call, and an interview. They actually have like a news kind of person who conducts an interview, this time with the CEO and the CFO. So the CEO, Christophe Fouquet, as well as CFO, Roger Dassen, were asked about what's driving this market, and can they, despite the slowdown in bookings, really deliver the gross margins and the guidance they have provided for the year? And they said, hell yeah.
Now, if we look at the market itself, we expect a shift towards more advanced technology. This is true for logic, this is true for DRAM, and as we explained in Capital Market Day, these are basically technologies that will require more advanced lithography. I also explain, it's very, very important, that the progress we have made on the 3800 and INA bring our customer the technology they need to switch more and more layers from multi-patterning to single expose EUV. And this is, of course, a good thing when it comes to litho intensity. With all of that, Jim, so we feel that we are making a very good step towards our guidance given at the Capital Market Day in November for 2030, with a range of revenue between 44 and 60 billion euro and a gross margin range between 56 and 60%.
All right, what's it all mean? What's your big drill down earnings takeaway, and what's the one number that tells us a whole lot, the drill down earnings bite? Yeah, we've got that. So your takeaway on ASML earnings. Here's what you need to know about ASML earnings. So Q1 earnings, your essential summary, your drill down earnings takeaway is that this company had a really good quarter. Revenues were up 46%, 7.7 billion euro in the quarter. Very strong quarter, driven by continued sales to China, although a little less in terms of what it had been the previous quarter. Still 27% of revenues though. But I promise you to bite the one number that tells us a whole lot, and that is the EUV machine revenues in the quarter. 3,214,600,000 euro in revenue in the quarter, selling these incredibly complex EUV machines to make the best semiconductors ever imaginable. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.